Welcome to GPL Capital Talks on Tuesday, a weekly podcast, bringing to you an interesting talk related to finance every week. Stay tuned. Subscribe now and press the bell icon to GEPL Capital's YouTube channel and never miss out on any stock market update and build your knowledge on investment. Hello everyone. GEPL Capital brings to you Talks on Tuesday, a weekly podcast, episode number 45. Our today's topic is 3 defensive stocks in your portfolio by a fundamental research analyst. Over to you.
Thank you, Susan, for this. Today, I am going to tell you about the 3 defensive stocks that you must have in a conservative portfolio. Before I start, please subscribe to our channel here and click on the bell icon for more updates. Firstly, to start off with, we have Wipro. Wipro Limited reported a healthy set of Q4 FY21 numbers. The company reported healthy IT service revenue growth and margins in the quarter. Some of the key highlights of the quarter were that it had deal wins which were up around 16.7% quarter on quarter to $1.4 billion. It also had a healthy net addition of around 7,400 employees and higher offshore mix up 180 basis points to around 55%. The robust Q1 FY22 estimates for the IT services revenue guidance would be in the range of around $2,195 to $2,238 million, translating into a 2 to 4% quarter-on-quarter growth. This guidance does not include the acquisitions of Capco and Ampion. Wipro in March had signed an agreement to acquire Capco for $1.45 billion to help scale up in banking, financial services and the insurance segment. A successful completion of the deal, according to analysts, is a key to add the IT company's US dollar revenue and create cross-selling opportunities and bolster the BFSI capabilities. Secondly, we have Sipla, which has expanded its COVID-19 portfolio to see traction along with core respiratory therapies. The US business saw market share expansion in the overall market for albuterol and institutional business. It has also filed for 2 partner peptide injectables in the US market. Sipla Limited's Q4 miss estimates as company took a one-time adjustment for albuterol based on the competitors in inventory. The impact was around 2%. Adjusting for this, the EBITDA margins were at around 19 to 20%, which is in line with estimates. The US sales were flattish at around $138 million, impacted by seasonality and price erosion in the base portfolio. The company's profitability in the US is now equivalent to the company level. The management remains confident of gaining further market share in albuterol, where it already has an around 80% prescription market share. And further, the management has also guided that it has a strong visibility of product launches in the US in the FY22, which will sustain growth going ahead. So this is a must-have defensive stock in our portfolio, considering the growth opportunities and ramp up in the albuterol, which was going as well as expected. Further launches in the US market will also stir up the US dollar revenues, which will do well for the stock. Thirdly and lastly, we have Asian Paints. As we all know that Asian Paints has been able to benefit from market share gains from both organized and unorganized players, given the strong innovation in paints and coating and growing use of putty and waterproofing led by painter or consumer awareness. Inferior construction quality also has created an awareness among the consumers to prefer brand names like Asian Paints. Asian Paints also has huge growth prospects in small towns and rural India, and also has an endeavor to emerge as a complete whole home solution company and not just limited to paints. So in the long run, this will pay good dividends to the shareholders. The company also faces a near-term challenge of cost input inflation and the second wave of COVID-19. However, the poor base of H1 to FY21 and a 2.8% price hike that the company has taken from May will provide cushion to profitable growth. So the company has always been able to pass on the cost to the end consumer and yet remain resilient in terms of demand. The company ended FY21 given the near challenges that all companies faced with a year-on-year growth, which is quite commendable and shows the resilience of the operating model of the company. So with this, I bring to an end the three stocks that we must have as a defensive conservative portfolio. One being Wipro, two being Sipla, and three being Asian Paints. Before I go, I hope you have subscribed to our YouTube channel. Please do click on the bell icon and stay updated with us for more updates related to the stock market. Thank you.
Thank you, Mr. Gaurav, for this interesting insight. Stay tuned for our next Tuesday talks, where we will be talking to you about 3 ways to build a 30 crore portfolio for retirement. Also use the hashtag AskExpert at GEPL Capital on Twitter and get all your questions answered on the stock market. Thank you. Subscribe now and press the bell icon to GEPL Capital's YouTube channel and never miss out on any stock market update and build your knowledge on investment.